Hey everyone, welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today's episode is one that every single trader and investor needs to hear: how to stay calm and stick to your plan when markets crash. When markets go red, fear takes over. Your screen fills with red candles, the news floods with panic, and your social feed becomes a blur of chaos. It doesn't matter if it's 2008, 2020, or the next Black Swan event. The reactions are almost always the same. Traders panic, emotions take over, and emotional decisions end up costing more than the crash itself. Let me ask you something. Have you ever looked back and thought, why did I sell so early? Or why did I hold too long? Or maybe you froze, watching your account value drop and didn't know what to do. That's what we're talking about today: trading psychology during market crashes and how to build emotional discipline that keeps you grounded when everyone else is losing their heads. Let's start with what happens emotionally during a crash. There's a cycle we all fall into. It starts with optimism, moves into euphoria, then anxiety creeps in, followed by fear, then outright panic. After that comes capitulation. That's when people sell at the bottom. Then despair, some hope, and eventually recovery. The danger zone is right in the middle: anxiety to capitulation. That's when your emotions start overriding your strategy. The thing is, those emotional reactions feel logical in the moment. When your portfolio is down 30% in a week, it seems smart to sell and cut your losses. But often it's not strategy, it's fear. And fear is expensive. Let's look at a few examples to understand this better. Take the 2008 financial crisis. The SP 500 lost over half its value. The news was apocalyptic. People sold in panic. But by March 2009, the market bottomed and then started one of the longest bull runs in history. Traders who held on, or even bought during the fear, saw major returns. Those who sold near the bottom, they locked in their losses. Fast forward to 2020, the COVID crash. We saw a 30% drop in record time. Global panic. Markets collapsed. But just a few weeks later, they began a historic recovery. Traders who stayed calm were rewarded. Those who panicked missed out on once-in-a-decade gains. Then there's the dot-com bubble. Tech stocks in the late 90s were red hot. Everyone wanted in. FOMO was everywhere. But when it burst, the Nasdaq dropped nearly 80%. Traders who bought in based on hype and held too long took years to recover, if they stayed in at all. So what do we learn from this? Crashes are normal. Fear is normal. But how you react to that fear determines whether you survive or thrive. Now, let's get into some real tools to help you manage your mindset when the market tanks. Number one, have a plan before panic hits. You don't rise to your intentions, you fall to your preparation. That means before you enter any trade, you need to know your entry and exit points, your stop loss, your risk tolerance, and what would make you reevaluate the trade. Write it down. Make it part of your routine. Number two, use the fear and greed index, but do it smartly. This tool gauges overall market sentiment. Most traders use it as confirmation. The pros? They use it as a contrarian signal. When everyone's scared, they start buying. When everyone's greedy, they get cautious. If the index flashes extreme fear, it doesn't mean panic. It means opportunity might be near. Number three, journal every trade and every emotion. Track what you did, why you did it, how you felt, and what you learned. Patterns will emerge. You'll see if you panic sell after red days, or if you overtrade when you're trying to recover from a loss. This builds self-awareness, which is critical for discipline. Number four, limit screen time during crashes. Staring at red charts all day feeds anxiety. Set alerts instead. Check at scheduled times. Don't let the market dictate your mood every second of the day. Number five, practice mental rehearsal. Athletes visualize their performance. You can do the same. Picture yourself sticking to your plan. Visualize holding your position through volatility. It sounds simple, but it trains your brain to follow through when the pressure is real. Now let's talk structure. How to actually become a disciplined trader in a crisis. It starts with automation. Set up recurring buys or DCA strategies so your emotions don't get a vote. Next, use rule-based systems. If X happens, I do Y. Take the guesswork out. Then, surround yourself with calm voices. If your feed is full of doom scrolling, mute it. Follow solid, educational voices like the Crystal Ball Markets podcast. Train your risk management muscle. If you're risking 20% of your portfolio on one trade, no wonder you're panicking. Keep risk per trade to 1 to 2%. Always use stop losses and never trade alone. Community keeps you accountable and sane. One of the best skills, not selling at the bottom. That's it. Just hold steady. You don't even need to time the bottom. You just need to not bail at the worst moment. Because here's the truth. Most of the biggest market gains happen in the days right after a crash. If you're out of the market, you miss them. That's why emotional trading hurts more than the crash itself. And finally, think long term. Focus on probabilities, not emotions. You won't win every trade. You will take losses. But if your process is sound and your mindset is strong, you'll come out ahead. Here are a few habits to help. Read daily affirmations or mantras before you trade. Meditate. Exercise. Keep your body grounded. Use your journal for post-trade reflection. And most importantly, judge yourself by execution, not outcome. If you followed your plan and lost, that's still a win. Discipline matters more than any single trade. All right, let's wrap this up. The market doesn't beat you. Your reaction to the market does. During crashes, the winners aren't the fastest or smartest. They're the calmest. The ones with structure, clarity, and emotional control. If you want to trade with discipline and focus, check out crystalballmarkets.com. They offer a beginner-friendly platform built around simplicity and education. And for more mindset tools, subscribe to the Crystal Ball Markets podcast. We cover the emotional side of trading because that's where your real edge lives. Stay calm. Stay focused. The market might crash, but your mindset doesn't have to. I'm Sophia. This is Financial Market Insights for Traders. Talk soon.